Welcome to the Deep Dive. Today, we are taking a rapid yet comprehensive X-ray of the market's pulse right at midday. It's 12 p.m. Central Time, Thursday, October 30th, 2025.
Yep, right at the heart of the trading day.
And our mission today is simple. Cut through all the noise, give you a shortcut to understanding the highest conviction trades, the most extreme market movements, and it's all filtered through the power of the IntelliTrader's AI system.
That AI X-ray is really key today because we're not just glancing at prices, we're digging into, volume drivers, the really deep valuation flags, critical technical signals, things like the 200 moving averages.
Right.
For you, the listener, this is about seeing where the major market flow is concentrated right now and maybe more importantly, why the AI is spotting such huge divergence in valuation all over the place.
Okay, let's unpack that. We definitely need to start with just the sheer force of volume where the money is moving. So let's do a rapid-fire 60 seconds, the top 10 symbols just dominating market activity right now. These are the names grabbing everyone's attention.
All right, lay 'em on us. Let's see who's driving the action.
Okay, number one, leading the entire market, huge lead in volume.
Yeah.
SQQQ, that's the inverse NASDAQ ETF. It's hitting nearly 120 million shares traded already.
Wow, 120 million on an inverse ETF.
Number two, the big tech bellwether, NVDA, that's at 111.5 million.
Okay, NVDA always active.
Three, TSLA. That's the leveraged Tesla bull ETF, 91.5 million shares.
Another leveraged product high up. Interesting.
Number four, CMG Chipotle. Surprisingly high, maybe. 73.5 million.
What is CMG seeing big volume?
Five, PFE, Pfizer, 70.2 million.
All right.
Six, Meta, 64.8 million.
Okay.
Seven, SOXL, another leveraged one, the semiconductor bull ETF, 53.1 million.
So that's three leveraged or inverse in the top seven.
Exactly. 8, GOOGL, Alphabet, 52.5 million. 9, F, Ford, 50.1 million.
Ford making the list.
And rounding out this really explosive top 10, TSLA, Tesla itself, at 48.2 million shares.
Okay, so looking at that list, it jumps right out. The number one spot is an inverse ETF, SQQQ, and then you've got TSLL and SOXL, these leveraged ETFs, peppered right in there.
Yeah, it tells a story, doesn't it?
It absolutely does. It tells you the sentiment, the underlying feeling right now is just dominated by volatility. You've got huge directional bets flying around and this really deep conflict, between people shorting the NASDAQ with SQQQ and others doubling down on high beta tech with things like TSLL and SOXL. There's a tug of war.
Definitely a market with strong opinions, maybe pulling in opposite directions. Let's dive into section one, the volume giants and ETF power. So we have to start with that number one, SEQQQ, the ProShares Ultra Pro Short QQQ ETF, trading around $13.14, but the volume is just staggering, almost 120 million.
Yeah.
The fact that the highest volume ticker is designed to go down when the NASDAQ goes up, that sets a pretty clear tone, right?
Yeah.
Defensive, cautious.
Oh, absolutely cautious. And that caution, it's amplified when you look at its technicals. What's really fascinating here, SEQQQ actually had a significant gap up this morning.
Right, suggesting a big rush into bearish bets at the open.
Exactly. But, and this is the key part, despite that initial surge, it's still sitting below both the 200 days moving average and the 200 hours moving average.
So even the inverse play is weak on a longer-term technical basis.
Precisely. It confirms that even the bearish momentum hasn't overcome the underlying technical weakness from a, longer-term perspective.
But here's where it gets really interesting, maybe confusing. The AI system flags a massive conflict with its true value metric. Despite all that volume, despite the weak technicals, the AI calculates the price as 16% undervalue based on the daily time frame.
Yeah, that's a head-scratcher for many.
So for listeners maybe newer to this, can you quickly explain what we mean when we say the AI is true value?
Sure. So when the AI calculates true value, it's not just looking at the current price. It's using this proprietary mix of factors, things like historical volatility, normalized PE ratios, comparisons within the sector, near-term projected earnings, a whole bunch of stuff. It's trying to figure out what the price should be mathematically based on those deeper fundamentals.
Okay, so it's a model-driven fair value estimate.
Exactly. So when SQQQ shows up as 16% undervalue, the model is saying that even with all the shorting activity, the price hasn't actually climbed high enough to reflect its underlying mathematical value based on volatility and other factors. There's still like a fundamental discount there, according to the model.
And we also see high implied volatility, the IV rank. It's at 67% and actually trending up.
Right, which confirms the market is expecting this volatility, this choppiness to stick around or even increase. It's pricing in more movement.
Now, what about the flow? Who's winning the buy-sell battle?
Well, that's the other interesting piece. Despite that absolutely massive volume, the buyer-seller direction is showing what the system calls a neutral trend, or N trend. It's seeing pretty much equal seller upflow and seller flow, meaning buyers and sellers are just duking it out fiercely, almost canceling each other out moment to moment. That's why the net momentum is kind of stalled, even with 120 million shares changing hands. It's a fierce battle with no clear winner right now. And we also see today's volume is about 80% of yesterday's already, but 30% of today's volume happened in just the last hour. So it's a sustained fight.
Okay, a high-volume stalemate in the biggest ticker. Now let's pivot hard to the other side, the tech heavyweight, NVDA. 202.62 cents, $111.5 million value. This looks like a very different picture technically, right? NVDA seems strong, trading solidly above both its 200-day and 200-hour moving averages.
Technically, yes, absolutely. It looks like a pillar of strength on the charts, but the valuation alarm bells, they are absolutely deafening here.
Okay.
The AI flags NVDA as an incredible 101% overvalue based on the daily time frame.
101%. So basically double what the AI model thinks its true value is.
Exactly. Double. And that's a critical divergence we need to pay attention to. When the AI shows a stock is more than double its calculated true value, it means one of a few things. Either the market is pricing in just massive, maybe even unrealistic future growth, or it's simply caught up in pure momentum, FOMO trading, and completely ignoring the underlying fundamental metrics that the model is using.
And is the immediate flow reflecting any cooling off from that momentum?
It is, actually. NVDA had a gap down this morning, meaning it opened lower than it closed yesterday. And the directional flow is trending down. Both the daily flow, seller D, and the hourly flow, buyer DN, are decelerating. It's still got that neutral trend, N trend rating. Same as QQQ, actually.
Interesting. So it's holding its technical ground above those MAs, but it seems to be losing some of that upward directional conviction, that momentum push.
That's a good way to put it. Holding ground, but the conviction seems to be waning a bit at these valuation levels.
Now, we absolutely have to talk about the leveraged ETFs beyond SKQQQ. You mentioned TSLA, Tesla Bull 2X, and SOXL Semiconductor Bull 3X. The implied volatility there is just extreme.
Extreme is the right word. They both have triple-digit IV ranks. TSLL is showing 113%, and that's trending down, interestingly. SOXL is at 116%, trending up.
What does an IV rank over 100% even mean?
It means the market is pricing in absolutely massive potential swings in the underlying assets, Tesla for TSLL, and the semi-index for SOXL. An IV rank that high suggests the options market is bracing for a truly seismic move, like way beyond the normal expected volatility.
Okay, let's look at TSLL, the 2X Tesla Bull, trading around $20.51. It also had a gap down this morning, and here's another one of those internal conflicts flagged by the AI.
Let me guess, valuation.
You got it. The AI sees it as 3% undervalue on the daily time frame, but simultaneously 8% overvalue on the 1-hour time frame.
Ah, the classic temporal conflict. That's something we look for specifically. It tells us the very short-term burst, maybe in the last hour or so, has pushed the price to a point where it looks a little overheated relative to the longer-term daily metric.
But the momentum seems strong here.
It does. Unlike NVDA or SKQQ, TSLL is showing strong momentum. We see buyer upseller upflow, which earns it a high trend H-trend rating from the system. That indicates strong, sustained directional movement recently.
Here it also has a high squeeze reading, 16.
Yeah, that's significant. A squeeze rating of 16 means it was in a really tight, compressed trading range recently. Think of it like a coiled spring. Now, combined with that H-trend rating, it suggests the string has uncoiled, it's broken out of that tight range, and is doing so with strong, sustained directional force. So high volatility, high momentum, breaking out of a squeeze, classic leveraged ETF action.
And what about SOXL, the 3X Semiconductor Bull?
SOXL is also showing that extreme IV rank, 116% trending up. But its valuation is consistently overvalue, 83% overvalue daily, and still 7% overvalue on the 1 hour. What's interesting here, though, is the volume. Its volume today is only about 60% of yesterday's.
So less participation compared to yesterday.
Potentially. It suggests maybe the bullish conviction in the semiconductor space, while still present, is perhaps decelerating a bit today compared to the broader market activity or compared to TSLL's action.
Now, there's another leveraged ETF that's showing some wild numbers, MEU. the Meta Bull 2X.
Oh yeah, MBTU is practically a case study in volatility today. This thing showed massive pre-market undervaluation, flagged at nearly 27% below true value before the bell.
And that seems to have triggered a huge reaction.
A colossal reaction. The volume surged to 284% of its previous day's trading. I mean, that's almost 3 times its average daily volume flooding in.
Wow, and despite that volume surge, where does the valuation sit now?
Remarkably, it's still flagged as 16% undervalue on the daily time frame. But, and this is crucial, the flow is intensely negative. It's showing sell-in and seller-down. Both daily and hourly pressure is downwards.
So massive volume, still looks undervalued daily, but the flow is strongly negative.
Exactly, and it's still flagged as a high trend, H trend. So what you're seeing is high-speed, high-conviction selling, driving the price down rapidly, even though it technically looks undervalued on the daily chart. Maybe reacting to the hourly overvaluation or just broad meta weakness.
That's complex. We also need to quickly mention TQQQ, the regular ProShares Ultra Pro QQQ ETF, trading around 117 tailors, decent volume at 43.3 million.
Yeah, TQQQ looks technically solid. It's above both 200 MAs. But the AI does flag it as 14% overvalue daily, so similar story to the broader QQQ index. Technically okay, but maybe a bit stretched on valuation.
Okay, so this first section really paints a picture. Huge volume concentrated in inverse and leverage products, major tech names showing technical strength but serious valuation questions, and just a lot of conflicting signals under the surface.
Conflicting signals and high conviction bets, that's the takeaway. The market is not moving tentatively here.
All right, let's shift gears in section 2 to focus on stocks showing really unusual volume activity and those valuation extremes the AI is highlighting. We're talking about names trading more than double yesterday's volume. These surges often signal something big is happening, right? Institutional moves, reactions to news.
Absolutely. These are the outliers, the anomalies you have to investigate. It's where you often find the edge. Let's start with some non-ETF names seeing huge volume spikes. You mentioned CMG, Chipotle earlier, 73.5 million shares. That's 244% of its previous day's volume.
Yeah, and Meta itself, not just the leveraged ETF, saw a 241% surge. 64.8 million shares traded.
Okay, so what's the flow telling us there? Are buyers or sellers driving this surge?
It's divergent. CMG is showing a mixed flow, seller up on the daily, but buyer up on the hourly. Seller up, buyer up. That suggests a real tug of war inside the stock. Buyers taking control recently, but sellers were dominant longer term.
An internal battle. And Meta.
Meta is under strong, unified selling pressure. It's seller, day and seller, DAG. Both daily and hourly flow is negative, and this is despite the AI flagging Meta as 7% undervalue on the daily chart.
So the market is selling it hard, even though the model sees some value there. Interesting. And did they gap down?
Both did. CMG and Meta both experienced a gap down this morning, so this surge in volume is happening after opening lower, perhaps sellers pressing their advantage or buyers trying to find a bottom.
Got it. What about other big volume movers? We saw Google on the top 10 list.
Right. Both GOG and GOOGL, alphabet classes, showing strong volume increases 127% and 120% of previous day, respectively. But here, the valuation story is consistent with NVDA. They are both flagged as highly overvalued. GOGL is 83% overvalued daily. GOG is 81% overvalued daily.
So money is still pouring into the big tech giants, seemingly ignoring those AI valuation warnings. It really underscores how strong the momentum trade is in this sector right now. People are buying strength, regardless of the fundamental math, at least according to our model.
But the real standout, the one that makes you go, whoa, has to be FMC Corp. Symbol FMC. It's a chemical company, trading around $16.47. The volume spike here is just off the charts. It's trading almost 6 times its average volume, 589% of the previous day's volume.
Okay, 6 times the volume. That's not just a reaction to news. That sounds like major institutional movement. Either capitulation selling, forced liquidation. Something big is pushing shares out the door.
And does the valuation line up with that kind of selling pressure?
It lines up in the most dramatic way possible. This massive volume spike coincides directly with an extreme undervaluation flag from the AI. FMC is calculated as 139% undervalue on the daily time frame.
139% undervalue.
Yes, and it's still 85% undervalue even on the short-term 1-hour frame. The AI model thinks the stock is incredibly cheap.
Okay, hold on. This raises a really critical question.
Yeah.
If the AI model, based on fundamentals and math, sees the stock as being worth more than double its current price, why are we seeing this colossal sustained sell-off? The flow is bearish too, right?
It is. It's showing seller up flow, and it's flagged as a high trend.
H trend.
Seller up, seller up. We need to unpack that later. But the high trend confirms the selling is fast and sustained, so why sell something so cheap so aggressively?
That's the million-dollar question, isn't it?
Mhm.
It strongly suggests that factors outside the typical fundamental valuation model are driving the price action. Maybe it's liquidity needs the big fund has to sell no matter the price. Maybe it's external pressures like fears about regulations or specific macroeconomic headwinds for the chemical sector that the model isn't fully capturing yet. Essentially, we're watching the market aggressively reject the AI's fundamental value assessment in real time. At high speed, the price action is completely disconnected from the model's value here.
Wow. A real clash between models and market reality. Okay, let's broaden out and list the absolute valuation extremes the AI is flagging across the board. These are the brightest red and green flags. All right. On the extreme overvalue side, where the AI is waving bright red flags saying these stocks have detached from intrinsic value, we have names like WULF, Parawolf, a Bitcoin miner at a staggering 204% overvalue.
200%.
Yeah. Then RGTI, Rigetti Computing, quantum computing play, 172% overvalue, QBTS, D-Wave, another quantum name, 120% overvalue, and of course, NVDA at 101% overvalue.
It seems like the speculative tech, the future-facing stuff, is priced way beyond perfection.
Way beyond. The market is baking in enormous future success, maybe excessively so, according to these models.
Yeah, the flip side, the extreme undervalue list. Where are the deepest green flags, suggesting potential deep discounts based on the math?
Leading the pack here is FI Fiserv, the financial tech company. The AI flags it as 165% undervalue on the daily time frame. Just incredible.
165%. That's even more undervalued than FMC.
Exactly. Then you have FMC itself at 139% undervalue. We see mRNA, Moderna, flagged at 20% undervalue. CMCSA, Comcast, also showing 20% undervalue. And even SKEWQQ, the inverse ETF we started with, is on this list at 16% undervalue.
The consistency on Pfizer, FI, is pretty striking, though. You said 165% daily.
It is, and it's not just the daily. The AI flagged it as 95% undervalue pre-market, and it's still showing 93% undervalue on the 1-hour frame right now.
So across multiple time frames, the model is screaming cheap.
Screaming cheap, yet, just like FMC, what's the flow? It's seller up, seller up. Relentless selling pressure meeting any attempt to rally. It highlights this huge tension we're seeing today, price action driven by perhaps short-term fear or forced selling versus the long-term mathematical value suggested by the model.
It's like the market and the model are in completely different universes for some of these names.
Pretty much. The AI also explicitly flagged unusual activity for several stocks today. WLF, EABIT, the Bitcoin ETF, mRNA, FMC, and ETHA, the Ethereum ETF.
And what does that unusual activity flag usually mean?
It means the system detected something specific and quantifiable, maybe a sudden volume spike relative to price change, or an extreme deviation in order flow imbalance that falls outside the standard metric checks. It's like an extra alert saying, pay attention here, something weird is happening.
Got it. We also see some numerical activity flags mentioned. PFE with a 2 GAN, AMD with a 5, XLF with a 1. Are those significant?
They indicate specific algorithmic pattern recognitions, usually related to volume patterns or volatility spikes the AI is programmed to look for. A 5 feed on AMD might suggest a higher level of unusual flow patterns compared to a 1 on XLF, for instance. It just adds another layer, confirming this midday market is seeing really targeted, almost chaotic action in specific names alongside broad polarization.
Absolutely. Polarized seems to be the theme. Okay, this feels like a good moment to pause. If you are enjoying these deep insights from the midday market data, and you want this kind of analysis to help you cut through the noise every day, definitely make sure to hit that follow button and turn on your notifications. That way you'll be the first to get our market analysis update.
Yeah, don't miss out. We're digging through this stuff daily.
All right, let's move into section 3, momentum, trend, and directional flow. We've talked volume and value. Now let's look at the dynamics. The 1-hour power trend rating seems key here. It tells us where the conviction, the speed of the move is strongest right now. Can you explain the difference between high trend and neutral trend?
Sure. So the AI assigns a trend rating based on the consistency and velocity of price movement and order flow over the past hour. High trend, H trend, means you're seeing rapid sustained movement in one direction. Things are happening fast and consistently. Neutral trend, N trend, means the flows are more balanced or the price action is decelerating, or maybe it's just choppy without clear direction over that last hour.
Okay, so where is the strong momentum, the high trend, concentrated right now among our top stocks.
The H trend group is definitely where the action is hottest. We see it in TSLL, the Tesla Bull ETF we discussed, CMG, Chipotle, despite the mixed daily hourly flow, Meta, CMCSA, Core Scientific, CLF, Cleveland Cliffs, GOOG, mRNA, Me2, the Meta Bull ETF, and FMC.
FMC is H trend.
Yes. That confirms the massive sell-off we talked about isn't just a sudden drop, it's sustained high-speed selling pressure continuing over the last hour. We also see H-trend in LQD, the investment-grade bond ETF, interestingly, ETHA, Ethereum ETF, and IWM, the Russell 2000 small-cap ETF.
So momentum is strong in leveraged products, some specific stocks under pressure or surging, and even in bonds and crypto ETFs. What about the neutral trend group? Where has the action calmed down a bit?
Well, calm down might be relative given the volume, but the directional momentum has balanced out. The N-trend group includes many of the highest volume names we started with: SQQQ, NVDA, SOXL, PFD, TQQQ itself, and also AMD.
So the initial massive surges or drops in the big inverse leverage ETFs and the tech titans like NVDA have, by midday, sort of settled into more balanced push and pull, even if the volume is still high.
Exactly. The directional intensity over the last hour has lessened for those names compared to the H-trend group. Now let's look closer at the direction of that flow, the buyer-seller pressure. We're looking for agreement between the daily and hourly flow, which signals strong, unified conviction.
Okay, where are we seeing strong, unified selling pressure, both daily and hourly flows pointing down?
We see that clear double seller pressure, seller B and seller D, in Meta, and its leveraged twin, METU. The high volume surge in Meta seems directly tied to consistent selling. We also see it in SDS, which is the inverse S&P 500 ETF, ultra-short S&P 500.
So consistent selling pressure pushing prices lower across both medium-term, daily, and short-term hourly timeframes for those names. What about unified buying pressure?
We find that double buyer pressure, buyer up, in CRZ, Core Scientific, and also in F Ford, this is a much cleaner signal, sustained buying activity pushing prices higher over both periods. Looks like accumulation or positive conviction building there.
Okay, now we have to tackle that counterintuitive one you mentioned earlier, the seller up flow. We see this in ET&T, FI, Pfizer, FMC, our big mover, ETHA, Ethereum ETF, and even MSFT, Microsoft. What exactly is happening there? It sounds weird, sellers pushing the price up.
It does sound weird, but it's a really important, sophisticated signal. Seller upflow means the selling transactions are predominantly occurring as the price ticks higher. Think about it. The price makes a small move up, maybe buyers nibble, and immediately sellers come in and hit those bids, taking the offered price.
So they aren't chasing the price down, they're selling into any strength.
Precisely. And when you see consistent seller upflow, especially in names like FI and FMC, which the AI flags as deeply undervalued, it suggests that any short-term buying pressure, maybe momentum traders trying to bottom fish or play a bounce, is being immediately and forcefully met by large structured selling.
Like big players using any little bounce as a chance to get out.
That's often the interpretation. It can indicate large institutions systematically offloading significant blocks of shares, using the momentary price recovery provided by buyers as exit liquidity. It's a technical sign of very persistent, very determined selling resistance, even if the price isn't collapsing straight down at that exact moment.
That distinction is critical. It's not passive selling. It's aggressive selling into strength. Okay. What about stocks where the daily and hourly flows disagree? The conflict zones.
Right. These signal an ongoing rotation, a battle, or maybe a potential reversal in the making. TSLL, Tesla Bull 2X, is a perfect example we touched on. The daily flow is buyer up, suggesting overall bullishness recently, but the hourly flow right now is seller up.
Meaning the recent buying strength is being actively sold into during this past hour.
Exactly. The short-term picture has shifted negatively against the prevailing daily trend. CMG Chipotle is the opposite. Daily is seller up, but the hourly flow is buyer up. Here, short-term buyers have wrestled control in the last hour, pushing back against the longer-term selling pressure.
So these conflicts highlight stocks potentially at an inflection point.
They do. Other important conflicts include AMZN, Amazon, which is daily buyer up, but hourly seller up, similar to TSLL, recent strength being sold into, and CMCSA, Comcast, which is daily seller buy up, but hourly buyer up, similar to CMG, recent buyers fighting the downtrend. These stocks are really wrestling with their trends right now. Major pivot points are being tested as we speak.
Lastly, in this section, let's touch on those squeeze signals again. You mentioned TSLL and TSLA both have a reading of 16. IWM is 15. What should an investor take away from a high squeeze number like that?
A squeeze reading fundamentally measures how tightly the price has been trading relative to its own historical volatility. Think Bollinger Bands getting really narrow. A high reading like 15 or 16 means the stock has been coiling up like that spring we talked about. It's been unusually quiet and range-bound.
And that usually doesn't last.
Typically not. That compression, that low volatility period, is often the prelude to a significant expansion in volatility, basically, a big move. The squeeze itself doesn't tell you the direction of the move, but it signals that the potential for a sharp move is high.
But you mentioned TSLL and TSLA are also flagged as high trend, H trend.
Right.
Yep.
And that's the key combination. When you see a high squeeze reading and a high trend rating simultaneously, it tells you the breakout, the release of that compressed energy, is likely happening now, and the H trend tells you the direction the energy is releasing in. For TSLL and TSLA, the squeeze is firing off with strong directional momentum. We also see lower squeeze readings on AAPL3 and PFE2, indicating less recent compression there.
Okay. Section 4. Let's pull back and look at the broader technical benchmarks and market indices to get context. The 200-day and 200-hour moving averages, these are often seen as critical lines in the sand for trend health, right?
Absolutely. The 200-day moving average, 200 DMA, is sort of the classic definition of a long-term bull or bear market for a stock. The 200-hour moving average, 200 HMA, gives you more of an intermediate-term trend perspective, covering roughly the last 50 trading days. Where a stock sits relative to these is crucial.
So let's break down our top 40 list. Which stocks are showing the most technical weakness, sitting below both the 200-day and the 200-hour MAs?
We find a pretty distinct group in that vulnerable position. This is a clear bearish technical signal. It includes some highly active names we've discussed, CQQQ, which makes sense for an inverse ETF in a potentially rising market, but still technically weak itself, CMG, PFE, Meta, CMCSA, T, AT&T, FI, Fiserv, Me2U, the Meta Bull ETF, and FMSU.
Wow, so FMC and FI, the extremely undervalued names, are also extremely weak technically.
Exactly, and the fact that such high volume rotation is happening in stocks that are already technically broken below both major averages, it really reinforces the idea that a lot of today's activity might be driven by fear or forced selling, or maybe that deep value hunting bordering on bottom fishing, rather than participation in established uptrends.
But on the flip side, the bullish signal above both MAs that still holds for most market leaders.
Overwhelmingly so, yes. The vast majority of the top 40 most active stocks are actually sitting comfortably above both their 200-day and 200-hour MAs. This includes the real heavyweights: NVDA, TSLL, GOGL, FQQQ, AMZN, SPY, MSFT, AAPL.
So this creates a real split market, doesn't it? The main indices and the tech titans are holding their bullish technical posture, acting like anchors, while all this frantic volume churns through lower-tier stocks, technically weak names, or those highly leveraged products.
That's a perfect description, a structural split. We also see some interesting cases right at the edge, stocks battling one of the MAs. This often signals a shift or a fight between the long-term and intermediate-term trends.
Like who?
We see RGTI, Rigetti, LQD, the bond ETF, SDS, inverse S&P, and SPXU, another inverse S&P ETF, are all flagged as currently crossing their 200-hour MA. They're right at that intermediate inflection point. And CLF, Cleveland Cliffs, is in a mixed state. It's above its 200-day MA, long-term strong, but below its 200-hour MA, intermediate-term weak. That suggests the longer-term uptrend is being eroded by more recent weakness.
Okay, zooming out further now to the major indices and sector ETFs themselves, what are SPY and QQQ telling us?
Well, the main benchmarks, SPY, the S&P 500 ETF, trading around $683.44, and QQQ, the NASDAQ 100 ETF, at $629.44, both experienced those gap downs this morning that we mentioned.
Like open lower?
And the AI flags them both as slightly overvalue on the daily frame, SPY at 4% overvalue, QQQ at 5% overvalue.
So what does that combo gap down to open plus mild overvalue flag suggest about the broad market sentiment right now at midday?
It suggests that while the overall technical structure is still generally bullish, they're both above their 200 MAs, the immediate pressure this morning was definitely bearish. The market opened weaker and seems to be selling off some of that minor excess valuation the AI model is detecting. The flow is also interesting. SPY is seeing conflicting flow, seller D daily, seller up hourly, which might suggest components within the S&P 500 are rotating internally. QQ, meanwhile, is end trend, confirming our earlier observation that the big tech names seem to have stabilized somewhat after the morning drop.
What about specific sectors? Anything stand out, like financials with XLF?
Yeah, the financial sector, represented by XLF, does show some relative weakness today. It's trading around $52.54. It didn't gap significantly, flagged as in range. The AI sees it as about 1% undervalue on the 1-hour frame, so not extreme. But crucially, the flow is seller-dean, seller-dean.
Double seller pressure in financials.
Right, that signals targeted, continuous weakness flowing out of the financial sector specifically today.
And quickly on bonds and crypto ETFs.
LQD, the investment-grade bond ETF, also saw a gap down. Its flow is unstable, buyer dean seller up, suggesting some conflicting pressures there too. In the crypto space, both IBIT, the iShares Bitcoin ETF, and ETHA, the Ethereum ETF, based on the outline, assuming a similar product, showed gap downs. And interestingly, both are flagged as showing undervalue metrics on the short-term 1-hour frame.
ETHA seemed to have strong selling pressure earlier.
It does. The data shows ETHA is 20% undervalued daily, but it has that strong seller up flow we discussed. That confirms that the selling pressure, likely initiated by the gap down, is being met by continuous resistant selling into any bounce. It seems the crypto market, or at least these ETF products, are definitely participating in the broader risk-off sentiment we're seeing play out today.
So if we summarize the gap analysis across the board,
The message from the open was clearly bearish. The vast majority of these top 40 high-volume stocks gapped down. The only significant names managing a gap up were almost exclusively the inverse products, SEXQQQ, SDS, SPXU, plus a few giants like GOGO, GOG, and AAPL, managing to buck the trend slightly. The short side definitely won the opening battle today.
okay, we've covered a lot of ground, digging through the AI data right at midday. And the picture that emerges, painted by this IntelliTrader's AI analysis, is really one of extraordinary divergence, all driven by massive volume.
Yeah, the core theme seems to be the market fighting itself. It's this constant battle between high momentum chasing strength, often ignoring valuation, and deep value considerations, where heavy selling persists despite mathematically cheap prices.
We've seen technically strong but wildly overvalued stocks like NVIDIA on under 1% overvalue, according to the model, still standing firm above those key 200 moving averages.
Right. And at the exact same time, we've tracked stocks like FMC, flagged as 139% undervalue, and FI at 165% undervalue, experiencing just enormous sustained selling volume, often driven by those complex seller upflows, suggesting big players are systematically heading for the exits, regardless of the apparent discount.
And all this is happening against a backdrop of extreme implied volatility in leveraged products like TSLL and SOXL, just underscoring this environment of rapid moves, high conviction, and general uncertainty.
It's definitely a market on edge, making big bets.
Which leads us to the final provocative thought for you, our listener, to maybe mull over. Considering all this data, if the market's core technical structure, defined by those 200 MAs, is holding firm primarily in the expensive, tech-dominated part of the market, while simultaneously massive volume is flushing out stocks that the models deem fundamentally cheap. What's really happening is the market attempting some kind of rational, albeit painful, valuation correction across the board? Or are we just witnessing a massive rotational flow? Is capital simply fleeing perceived weakness and concentrating almost exclusively in the dominant tech leaders, pretty much regardless of their price tag?
That question, correction versus rotation, I think the answer to that is going to define the trading landscape for the rest of this quarter, maybe even longer. Watching how this resolves will be key.
Absolutely. Well, if you found this level of deep dive analysis helpful, if you want these kinds of AI-driven insights to give you an edge and help shortcut your understanding of the market's complex movement,
And you know what to do.
make sure you hit that follow button, turn on notifications so you don't miss our market analysis updates. We bring this to you every day.
We do. Thanks for tuning in. We'll catch you on the next deep dive.